If you're not watching XRP right now, you're missing something huge. The RSI just hit 24, which is screaming oversold territory, and the AI models are showing some wild predictions. Let's break it down. Here's where we are right now. XRP is sitting at $1.1374, down about 3% in the last 24 hours. Now, I know that sounds rough, but here's the thing. Sometimes the market has to get really ugly before it gets beautiful. We've seen trading between $1.09 and $1.18 today, and honestly, this kind of volatility usually means something's about to shift. So here's why this RSI number matters so much. When I see 24.19 on the RSI, that's not just oversold. That's extremely oversold territory. You know what I've noticed over the years? When assets get this beaten down, they tend to bounce back pretty hard. The MACD is still negative at minus 0.0465, which, well, that's the bad news. But XRP is hugging that lower Bollinger Band. And historically speaking, that's often where the magic happens. Now, this is interesting. The one thing that's really moving markets today is dollar strength. XRP has a negative correlation with the dollar index of minus 0.511, which means when the dollar gets stronger, XRP typically gets weaker. That's exactly what we're seeing right now, but here's the thing about correlations. They don't last forever. On the regulatory front, we've actually got some pretty exciting news. Ripple just launched their RLUSD stablecoin, and it's already operating in Turkey with plans to expand across 40 different blockchains. If this momentum continues, we could see some serious adoption growth. Plus, XRP Ledger is getting a major upgrade to version 3.2.0, which should make everything run smoother. The mood right now is, well, let's just say it's pretty grim. The Fear and Greed Index is sitting at 12, which is extreme fear territory. XRP search trends are low at 3.3. And honestly, nobody seems to be talking about it much. But you know what? Sometimes the best opportunities come when everyone else is scared. The big players are doing something interesting, though. We're seeing massive whale withdrawals from Binance, and that's actually good news. When whales move their coins off exchanges, it usually means they're planning to hold for the long term, not sell. We've got over 1,000 whale transactions happening, which tells me the smart money is positioning themselves. In plain English, we're at this stage where XRP is going through what technical analysts call a C-wave correction. Think of it like the market is having a really bad day, but it's almost done having that bad day. The Wyckoff analysis suggests we're in what's called markdown phase A, which sounds scary, but usually comes right before things start turning around. So what does the A, I think? This is where it gets really interesting. The short-term prediction for tomorrow is $1.38. That's about 22% higher than where we are now. But here's the kicker. The 7-day prediction shows $2.16 with a 99.1% upward probability. Wait, 99.1%? That's basically the AI saying it's almost certain XRP is about to rocket up in the next week. The 30-day target is around $2.04, so we're looking at potential gains of 60 to 90%. But here's what could go wrong. Those ETF outflows are still happening. We've seen $19 million leave XRP ETFs recently, which means institutional money is still nervous. Also, if XRP breaks below that $1.09 support level, things could get uglier before they get better. The dollar staying strong could also keep pressure on crypto in general. Here's my take. This is a phased buying opportunity. I'm looking at this data and everything is screaming oversold bounce to me. First entry point would be right here, around $1.10 to $1.15. If it drops more, I'd add another position between $1.05 and $1.08. Stop loss at 95 cents because, well, if it goes below that, the whole thesis is probably wrong. First target is $1.50 for a quick 30% gain, but the real prize is that $2.10 level the AI is pointing to. That's it for today. The market's giving us a pretty clear setup here. Extreme fear, oversold conditions, and AI models practically screaming bullish. If this helped you see the bigger picture, smash that like button and subscribe for more market insights. See you next time.